While politicians debate carbon taxes as a solution to climate change, a handful of insiders are quietly positioning themselves to profit from the largest wealth transfer in modern history. The same policy mechanism designed to save the planet is about to mint a new class of billionaires, and it's not the people you'd expect. By the end of this video, I'll show you the 3 little known loopholes they're exploiting right now, and why one of them could make early investors richer than the entire dot-com boom combined. They say the carbon tax is here to save the planet, but what they don't tell you, it's making a very specific group very, very rich. This isn't a story about saving the polar bears or planting a few trees in your backyard. No, this is a story about money. Big money changes the world, builds empires, creates a new class of billionaires overnight. We're in the middle of a massive global shift, a transition to a low-carbon economy. Big shifts create loopholes. These loopholes are not small cracks, they are gaping canyons big enough for private jets filled with gold, pulling back the curtain on a new financial frontier where good intentions meet cold, hard cash. So let's talk about the first loophole. This one is called the carbon credit market. It's a beautiful idea, really. Imagine you are a big company, megacorp, you run a lot of factories, you produce a lot of carbon dioxide. The government tells you there's a cap on how much you can pollute. If you go over it, you pay a big fine. But here's the clever part. If you can't cut your own pollution, you can pay someone else to do it for you. Enter the carbon credit. A permission slip for pollution, a get out of jail free card you can buy. Somewhere else, maybe deep in a rainforest, a project is actively reducing carbon. Maybe it's a company planting millions of trees, or a project capturing methane from a landfill. For every ton removed, they get a certificate, a carbon credit. Megacorp, which can't afford factory upgrades, goes to a marketplace and buys those credits. Voila! On paper, Megacorp met its target. Megacorp keeps polluting. The tree project gets paid, and everyone feels good. Sounds like a win-win. But here, the money machine starts to hum. Credit's value isn't fixed. It fluctuates with supply and demand like a stock. That spawned a new industry, traders, brokers, and trading platforms. These platforms are the new casinos of the climate era. Early investors who bought credits cheap, say $5 a ton, are now watching demand skyrocket. As more countries tighten limits, more companies like Megacorp scramble to buy credits, pushing prices to 50, 100, or even higher per ton. The platform builders are modern casino owners. They don't bet on prices. They take a small cut of every transaction. With billions traded daily, those cuts turn into massive fortunes. They've built a private toll booth on the highway to a green economy. Now, buying and selling these carbon credits is one thing, but how do you even know they are real? You can't exactly hold a ton of saved carbon in your hand. This brings us to a crucial part of the loophole, verification. To create a carbon credit, a project, like that forest we talked about, needs to prove actual carbon removal. And they must prove that removal wouldn't have happened anyway. Proving a negative is tricky. That need for proof created a highly profitable niche industry of verifiers, certification bodies. These are private companies, the auditors of the carbon world. They are the gatekeepers. They travel to project sites, analyze the data, and give the official stamp of approval. Without their signature, a forest is just a forest. With their signature, it becomes a factory producing valuable carbon credits. That gives these firms immense power. They decide which projects get certified and which don't, and they charge very handsome fees. They're the private mints of the green economy, turning environmental action into currency. Example, a company will call Green Certify, one of the first carbon auditors, back when the market started. They developed proprietary methods for measuring carbon in soil, forests. They hired teams of scientists, auditors, and got accredited by international bodies. Early days, small, niche projects. Then the market exploded and major corporations and land developers all needed their stamp. Green Certify could name their price, charging millions for a single large verification. Founders who started with a good idea and expertise ended up sitting on a gold mine. Early investors saw shares multiply 1,000-fold. They didn't trade credits or pollute. They controlled the creation process. They built an empire on trust and paperwork. The wealth came from the paperwork, not environmentalism. The second major loophole is even more direct and more outrageous. It's called grandfathering, a key feature of many cap-and-trade systems. The idea is to soften the blow for big, established industries as they transition to a carbon-priced world. Here's how it works. The government sets a total cap on pollution in a sector: electricity generation, steel manufacturing. Then it creates permits, each one equals the right to emit 1 ton of carbon. The total number of permits matches the cap. But instead of auctioning them off, the government gives a large portion away for free to the companies that polluted the most for the longest time. This is grandfathering. It's a gift. A massive multi-billion-dollar gift from the public to private corporations. These companies, after decades of contributing to the problem, are handed valuable assets for nothing. They get stacks of permits based on historical emissions. If a company cuts pollution below its free permits, it can sell leftover permits on the open market to other companies struggling to meet targets. This rewards the biggest historical polluters with a new revenue stream. Pollution rights become a tradable commodity. Bought, sold, hoarded. A company with a huge free allocation can dominate the market without changing operations. They can sit back and profit from selling assets they were gifted. This is rent-seeking behavior, making money not by innovating but by controlling a scarce asset gifted by regulators, like getting a free house and renting it out for profit. Early beneficiaries, legacy industries, old power plants, steel mills, cement factories. Their lobbyists worked the halls of government to shape the rules. They argued they needed free permits to remain competitive, to protect jobs, to avoid sudden economic shocks. Result: a policy meant to penalize pollution instead gives a massive windfall to polluters. The public bears the cost of pollution while companies pocket permit profits. For a crystal clear example of how grandfathering creates fortunes, we don't have to look far. We just need to look at the early days of the European Union's emissions trading system, the world's first and largest carbon market. It was launched in 2005. The primary goal was to put a price on carbon for thousands of industrial installations across Europe. To get the system started and secure industry buy-in, regulators handed out permits. Over 90% in the first phase were given away for free. They were allocated based on historical pollution levels. The biggest polluters got the most free permits. Major utility companies. Industrial giants like the steel manufacturer ArcelorMittal. They received billions of euros worth of permits at no cost. The logic: prevent them from raising prices for consumers and give them time to invest in cleaner technology. However, something else happened. Many companies found they could cut emissions cheaper than expected. In other cases, they passed permit costs on to customers as higher electricity or steel prices, even though they had received the permits for free. That allowed them to double dip and make a profit. It created a massive unintended transfer of wealth. ArcelorMittal, for instance, reportedly made billions in windfall profits early on by selling surplus free permits on the market. They were effectively paid for pollution they didn't emit. The permits, meant as environmental tools, became pure profit on balance sheets. Investors who understood this saw company stock prices set to benefit. It became a state-sanctioned moneymaker. The lesson is stark. Give away valuable assets and you create vested interests. Those interests will fight to keep the system as it is. Companies that profited became the system's biggest defenders. They lobbied to keep generous allocations in later phases. A well-intentioned climate policy can be captured by incumbents. A tool for change can become a mechanism for enriching the very players it should regulate. The public wanted climate action. What they got was a system that generated billions for corporate shareholders. The third loophole is perhaps the most futuristic and the most ambitious. It involves carbon removal contracts and the privatization of what are called carbon sinks. A carbon sink is anything that absorbs more carbon from the atmosphere than it releases, like forests, oceans, soil. These sinks are becoming incredibly valuable real estate as the world moves from cutting emissions to removing carbon. That has kicked off a race to own and control them, privatizing the planet's ability to heal itself. This is the next frontier of the carbon gold rush. Here's the business model. A large corporation, a tech giant, an airline, wants to go beyond carbon neutral. They want to be carbon negative. So they pay someone to pull CO2 out of the air for them. That created companies specializing in direct air capture, giant fans, chemical processing plants that pull CO2 from ambient air. It also includes nature-based solutions like massive reforestation projects. These companies sign long-term, multi-decade contracts guaranteeing yearly removal at a fixed price. Those contracts are financial dynamite. A 20-year deal with a tech giant is like winning the lottery for a startup. It guarantees steady, predictable revenue and makes the company instantly valuable to investors. Firms use those contracts as collateral to borrow massive sums to build more DAC plants or buy huge tracts of land for trees. They're locking in today's prices for a service that will only become more essential and more expensive. It's a strategy for concentrated long-term value that creates a new kind of monopoly. Instead of owning oil, billionaires will own the means of cleaning the air. To see how this third loophole plays out in the real world, let's consider a hypothetical but very plausible example. Imagine a new, forward-thinking investment fund we'll call Terra Capital. This fund isn't buying stocks, this fund isn't buying bonds. Its mission is to acquire long-term control over massive carbon sinks. Their analysts identify a huge degraded region on the edge of the Amazon rainforest. The area was previously cleared for cattle ranching. The land is cheap. Its potential for reforestation is enormous. Terra Capital spends a few $100 million. They acquire rights to tens of thousands of square kilometers. Their next move is to bundle this land into a massive carbon removal project. They partner with local communities. They replant native tree species. That creates jobs. That restores the ecosystem. Using satellite imagery and advanced modeling, verification partners certify the project will sequester millions of tons of CO2 over the next 50 years. Now Terra Capital has a product to sell, guaranteed, high quality, nature-based carbon removal. They go to a consortium of Fortune 500 companies. These companies have pledged to become carbon negative by 2050. Terra Capital offers a unique long-term deal. They sign a 30-year contract to sell verified carbon removal credits for a pre-negotiated price. This single contract could be worth billions over its lifetime. The initial investment is de-risked almost immediately. The company's value skyrockets on private markets. The founders become gatekeepers to a substantial piece of the planet's carbon-absorbing capacity. Now, this all sounds like a smooth ride to riches, but it's not without its dangers. The entire carbon market is built on a foundation of rules and regulations created by governments. And what governments give, they can also take away. The biggest risk for these new carbon billionaires is regulatory change. A new government could come into power and decide to change the rules of the game. They might decide to stop giving away free permits, tax windfall profits from their sale. They could also tighten the standards for what counts as a legitimate carbon credit, making millions of existing credits worthless overnight. Public backlash is another growing storm cloud on the horizon. As more people begin to understand how these loopholes work, there is likely to be a significant amount of anger. The idea that the biggest polluters are receiving free permits and making profits from them does not sit well with the public. Likewise, the notion that a few private companies can gain control over vast natural resources for the purpose of selling carbon removal services can be seen as a new form of colonialism. Activist groups and investigative journalists are already starting to shine a bright light on these practices, and the resulting public pressure could force politicians to act. This brings us to the crucial issue of transparency. For this market to have any legitimacy, it needs to be watched. The public needs to be able to see who is getting free permits, how many. We need to be able to scrutinize every carbon credit project to make sure it represents a real additional reduction in emissions. Without clear, accessible, independently verified data, the entire system is vulnerable to fraud and manipulation. The lack of transparency is what allows these loopholes to be exploited in the first place. Demanding radical transparency is the first and most important step in closing them. Ultimately, the ethical questions are profound. Is it right for individuals and corporations to accumulate vast fortunes from a crisis that threatens all of humanity? Should the tools we design to save the planet also be designed to create a new class of ultra-wealthy elites? These are not easy questions, but they are questions we must ask. So there you have it. The carbon tax, an idea born from a desire to heal the planet, has inadvertently kicked off a new gold rush. We've seen how the complex world of carbon credit trading platforms allows a few middlemen to get rich off every transaction. We've seen how the grandfathering of free pollution permits hands billions of dollars in free assets to the biggest historical polluters, rewarding the very behavior we want to stop. We've seen how the race to own carbon sinks through long-term contracts is creating a new kind of monopoly, privatizing the very air we need to survive. These are the loopholes that are busy making billionaires. This isn't a conspiracy theory, it's simply the predictable outcome when you create a new multi-trillion-dollar market and allow the rules to be written by those with the most to gain. Pay attention, watch the laws being written, watch the markets being built. Because the fight for our climate is also a fight for who owns our future.